Hi, everybody. Took a while to get mic'd up. So my name is Gafni. I lead Fintech and external innovation for JPMorgan in the region. Happy to have this lovely panel of experts, each and everyone in his domain. So I think we get started. So we all know that the financial industry has undergone tremendous shift in recent years, from considering fintechs as at first as the enemy, then as frenemies, and in recent years as partners. Let's try in the very short time that we have to answer some key questions in this space. Please try to keep the answers short, because we're quite a lot of people here. So financial institutions are often criticized for their engagement policies or strategy with startups. Some go as far as to maybe say that large banks can even kill startups. Why is that, in your opinion? What are some of the challenges or successes in this relationship, in your experience? As part of your answer, please introduce yourselves and, if possible, share one funny or sad story, because we all have them, when fintechs engage with corporates. Yaniv, maybe you can start.
Thank you. Hi, I'm Yaniv. I'm the founder and CEO of Change Labs. We've launched an AI technology to help banks leap forward and win their battle against challenger banks. I think that, first of all, my experience, and that experience comes from our relationship with BBVA, is kind of completely different. Because we've experienced something that was pretty fast, like compared to the stories that we've heard from other startups, peers of ours, about their engagement with incumbents and other large global banks. Our process was kind of quick, and the experience that we've had with interacting with banks, executives, top executives, to low-level people that we're working with on a daily basis is completely different. So I guess I'm not such a good example of someone that had a bad experience with working with the banks.
Mm-hmm. David, you want to compliment?
Yeah. Hi, everyone. My name is David Martín. I work at the Open Innovation Global Team based in Madrid, and we call ourselves ecosystem colliders, based on inspired by the CRN famous particle accelerator at Switzerland. So we aim to accelerate or to provoke collisions between the particles in the ecosystem and the particles in the bank, the business units. Sorry. And I don't want to call you a particle. Sorry for that. You are a big company, excellent company. But let me tell you something funny, because when I met 2 weeks ago the guy who is leading the project with Yaniv in the States, in our bank, in Compass Bank, in our bank in the States, he told me Yaniv is a gentleman, and he has been extremely patient with us. So I presume that the experience might have been much better. You are very polite. Thank you for your words. We have improved a lot in the last 2 years. We have implemented internal processes in order to speed up the procedures of the processes when piloting or doing proof of concept with the startups. Unfortunately, Yaniv was a maverick or a pioneer and couldn't experience that at some extent. But, well, it's a good news that we both are here together.
Still here, yeah.
Hi, my name is Idit. I'm the technical director of our commercial partner organization in Middle East and Africa. I spent many years in the company in Microsoft, so kind of the experience been on the other side, on the enterprises and with the startups in the last couple of years. What we see, and startups that are coming to us tell us, it's very difficult to work with big institutions, being banks and insurance companies from the regulation perspective, compliance, procurement, and these type of things usually prevent doing business fast. And as a startup that has a limited space of time and cash, sometimes engaging with those organizations make it very difficult. And that's where a technology partner can really drive an edge and give an advantage to a company because they can really help make that connection for them and really speed up their ability to drive business.
Mm-hmm.
Hi, my name is Alla. I'm sorry for my voice. I had a little bit too much fun yesterday. I am a co-founder and CEO of Straterix, which is the next generation of scenario design and strategic planning. But I worked on both sides. I was a banker for many years. I was the global head of financial strategy for Citi, Goldman, Nomura, and kind of know the life on both sides of the border. And one of the funniest and saddest stories that I encountered while being an entrepreneur was our meeting with one very big bank, very big international bank, with pretty senior people there who were extremely interested in our methodology, but one of them said, you know what, I really like you guys. You have great product, but I don't want you to waste your time. I used to have a startup too, but because in this organization, nobody could make a decision, I lost my startup, and now I'm working for this organization. And he said, and even when I'm inside, I still don't know who makes decisions here. So that is probably a problem that has to be overcome.
Hey everyone, my name is David Feldman. I'm the Fintech domain manager at Deloitte Catalyst, formerly ITT. The Catalyst is a platform that was created here in Israel just about 3 years ago. What we do is technology scouting for Deloitte's global clients. We work by vertical, so I lead the Fintech for our group. I think a funny story to start with that Ziv had asked about a story. One of the stories that happened actually recently was we had a startup come in, pitch to one of the banks that's a client of ours that came into Israel. And as every founder of a startup, came in excited to talk about his idea, motivated, pumped, really ready to sell his product. And finished his presentation, hoping for a great answer. And the bank looked at him and said, you're trying to solve a problem that has already been solved, and it's completely irrelevant. So obviously at that moment, the startup was crushed. They didn't know what to do. All the time and money that they put into this idea sounded like it all went to the garbage. So what the bank next said was, but if you take this idea and slightly pivot to the right, you'll have a perfect product with even a larger market. And I think that that's a really great story, especially for the Israeli ecosystem, that a lot of times we see startups here that are a problem or a solution looking for a problem. And I think the willingness of a startup to slightly pivot to better open up its own markets is obviously a great thing to do, and specifically from this experience.
All right, thanks. So fintech companies come in all shapes, sizes, colors, tastes, and smells. Large corporates are used to standardized processes, and change can often produce internal bottlenecks, as was mentioned before. And according to the 2018 World Fintech Report, there is no one-size-fits-all. It was a report that really did a lot of research in all major financial institutions, how they partner with early-stage, late-stage companies, but with the fintechs. And there was no one-size-fits-all approach to successful collaboration. Is this true? In your experience, this is what you know? Because for some people from colleagues, it wasn't really acceptable. Are there certain metrics that always stand out in decision-making processes, no matter the prospect? At JPMorgan, it was mentioned before, Mike said it in his keynote, we do partner with many, many fintechs. Just in POCs, we have dozens, around 110 POCs currently running. We've invested in more than 150 companies with a total worth of $2 billion. So we've constructed our engagement process to be tailored on a case-by-case basis. What that means is that every company we will try to find the fastest ways possible to partner with the same rigor, attention, and C-level support. But with each company, we might look for something different or prioritize certain metrics over others. We're also building an innovation lab here in Israel, in Herzliya, to enable rapid assessment of technologies and solutions. David from Deloitte. We have two Davids. Let's start with you. What do you think?
So I think a couple of things that can be done by a startup to ensure that a partnership even happens are, one, we still see too many fintechs or really any startup coming into these types of meetings not preparing in the right way. They don't understand who they're coming in to meet. They know the name, they know the logo, but they might not know who the people are in the room. And it's very important to know that when a company is coming in for a pitch, whether it's investors or an actual bank. We're seeing startups that may come in and give an investor's pitch to a bank or vice versa. Also on the regulation side, make sure that you're actually compliant to the regulations in the markets that you're trying to sell to for the company that's in the room. Just a little bit more about what we're doing. So I sit really in between on a day-to-day basis between local startups here in the Israeli market to our global clients. And this is something that we see quite often. That's my answer.
Well, I can say that from our side, the most difficult obstacle is good enough. There was a quote recently from, I think from one of the TED Talks, good enough is not good enough anymore. And that is something that fintech industry should try to overcome. And it was very interesting that you said that a lot of fintechs are trying to solve the problem that's already solved, right? But as we heard, jumping the curve means solving the problem that people don't know exist, or solving the problem that people think is unsolvable. And this is where good enough, you know, like we do it manually. It costs us tremendous amount of money and resources, but we somehow manage. And you guys say that you can get us there in a light speed. Somebody has to make this leap of faith to try.
So I think the opportunity for digital transformation in the financial industry is almost everywhere. You look at the bank and the organization, and you can probably fit 3 or 4 major pain points they will have in any single department. On one hand, it's a huge opportunity, but on the other hand, it makes it extremely difficult and overwhelming for an organization to consume that innovation and really be able to filter and understand which solutions would be best fit. And that's what I think you need someone to help the organization to embrace that wealth of opportunities of fintech companies that have solutions that can solve their problems, but really help them really adopt and change accordingly, because most of them require some change management, and it's not just a solution you deploy on a technology and the adoption happens.
Also risk management. Also risk management.
Absolutely.
I think that, you know, the difference between, I used to be a challenger bank, okay? I used to work directly with consumers in the United States, doing deposits and savings, and I think Yoav from JPMorgan, he mentioned that banks now, the biggest asset is trust, right? So trust is the biggest asset that they have, and they're building on it. And the fact that, you know, I as a challenger, I didn't have anything to lose, because I didn't have customers, and I was going out to acquire new customers, and everything I gave them was a new experience. Banks that I'm talking to right now have 30, 50, 70 million customers. So every little thing they do can make a huge impact and can really damage their trust. That's why it's really important for them to test me and to see that it's accurate and you can trust it over time. And it takes time. It takes time to make sure that you've got that, you know, partner that you can trust in order to introduce their solutions to your customers And that's risk management. I think that's for them, for the banks that already have the customer base, for them, that's the most challenging part.
I fully agree. One of the main pain points that we find when working with scale-ups, fintech startups, is they are relating to the operational risks and reputational risks. As you mentioned, we have a huge customer base, and every little impact on the business might, affect the whole or the entire customer base. So that's why we are working very close to the risk department in order, to perceive new players like Yaniv, like these companies, as not as well as typical providers, but new companies that might help us build a better future. But always bear in mind that risk is something that we have to take care of.
Definitely. And is there a certain ideal stage at which a company should engage? Can it be too early or too late? What do you think?
Yeah, well, it depends. The way we are working with the business units nowadays at BBVA Open Innovation is that we meet them, let's say, every 2 quarters, and we try to find what they are going to need to do in the next 2 quarters and find gaps or opportunities for fintechs or for external companies. So this is very short term. And basically what we are looking for are companies that might be ready to work with us in at least one of our geographies in our footprint. We are not, unfortunately, looking for inspirational companies. We need for companies, for scale-ups, for growth companies that can start operations very fast with us. So it's not, let's say disruptional innovation is incremental innovation. It's what we are doing nowadays.
Any other thoughts?
I think it really depends on the pain point the solution is solving. Some pain points are just easier to justify for the bank to take the risk and deploy even a solution that is not fully baked. And I'll give an example. One of our startups that we work with doing biometrical, called BioCatch, they're doing a biometrical profile of an individual, and that's for real-time fraud detection. Their ability to demonstrate ROI for the bank is enormous, and their ability to then be deployed is much faster, and their sales cycles will be a lot faster. But a solution that is going into the marketing department or something that, again, going back to the regulation and data and privacy and PPI information, all that type of things will just prevent from the early adoption unless they can sort a very acute problem the bank might have. So not all size fits all in for that question.
Yeah, I totally agree on this note. Everything should be absolutely standard. And I want to know that most incubators are fairly standard, regardless of whether you are, experienced with ready product or you are 2 kids in the garage with, nothing but an idea. Incubators, all of them offer you exactly the same thing. So some customization from the incubator side would be helpful.
So I think on a basic level, most banks that I've worked with are interested in a product that's already released and at a more of a mature stage than super early. But I think just as important, companies need to be corporate ready. Startups need to be corporate ready. And what I mean by that is a lot of times startup founders, young, old, with a product that may even be mature, don't yet know how to work correctly with a corporate. Things take time. Processes are long. They may not sign an NDA in a couple of days. It may take a few months if it's important to sign anyway. And I think startups really need to focus on that as well, to be corporate ready and have someone on your team or your advisory board, someone that you can reach out to and how to make sure that the dynamics of your company are really ready for the corporate structure.
All right. How, in your opinion, can the POC pilot integration process can be optimized? What do you think?
Okay. So let me elaborate a little bit about our fast track program, which is something that we have built in the last 2 years. It's something that comes from our bank in Mexico, Marcela Cetina, which is in the room. I don't see her. She's participating in another panel after lunch. She made the embryo of this initiative, and it's about putting all the stakeholders within BBVA together once we start the process of piloting or doing a POC with a startup. It's not only about business, design, technical guys, it's also about all the control areas, risks, compliance, legal, procurement. So what we do is to invite startups to participate in this process. We physically bring them to some of our geographies where we have implemented fast track: Spain, Colombia, Mexico, Argentina, and Peru. It's not yet in the States, sorry. It will be. And they work together for 1 week, more or less, with a design thinking methodology. They build a user journey. They try to find the exact problem, the value, the fit for the bank, for the startup, for the fintech. And once they have defined how the POC or the pilot might be, with a blueprint, they present in front of all the stakeholders, all the control areas. And they have a first okay or cow or go or no go in the first week. So we try to prevent the startups to become zombies within the great organization. We try to have an answer in the first week. And it's proven that this process has improved a lot our relationship with startups. We are decreasing by half the time we take to make POCs or pilots.
Nice.
So hopefully next time, you will not because you have already made the POC. Hopefully you will be a strategic partnership of a strategic partner of BBVA. You will not need a fast track. It will be another track.
He has the scars on his back already.
Yes, I now in Peru and in Colombia, we're actually building on top of that fast track. I can tell you that on our end.
Place.
Sorry?
I know a great ceviche place.
On our side, what we've done is we've developed that sales structure, sales process, where we come in and we have to identify, because at the end of the day, a bank is a business, okay? And they have a buying center, they have someone who makes the decisions, like someone who has the pain point, has the KPI, and makes the decision, has the budget. So we try to come in, identify that, and within a 3-day workshop, we are able to make our research around a business problem with the business owner in the bank, make our research, take a snapshot of the data, make our research, and then come up with the results and have a go, no-go from that particular business owner. That workshop, of course, it's something that costs around $15,000, but it's something that it's very easy for a decision maker, for the bank, to absorb and to go forward with. And we feel like that's the right way to move forward in terms of POCs, to have that sort of trust-building process that starts slow and accelerates over time.
Alla, I'm wondering.
I think that's one of the advantages of a technology partner. So at Microsoft, those startups that we work with, we kind of guarantee their technical capabilities. We check their products. We check their architecture. We review, and actually we build with them their architecture so they will be able to optimize for the best cloud services, optimize for performance, optimize for cost. So the risk for the bank from a technical perspective is reduced. Now, because we get them in front of the right stakeholders, their ability to really be in front of the people that will make the decisions are higher, making more likely that the POC will start. But once it starts, or even way before it starts, is really defining the KPIs and making sure it's very clear what a good POC will look like and what will happen next. But only people, a strong technology partner that does that as part of their leaving can really accelerate that whole process and make it less painful.
I totally agree with your point, and I want to expand on that. So first, I think for successful start of POC, the banks have to give different incentives to people. I know that during financial crisis and right after, everybody was complaining that traders in the banking organizations would have asymmetric incentive. They leverage somebody else's money. They get big bonuses if they win. In the worst case, they will be fired, right? But they don't lose anything. And obviously banks were trying to do something to overcome this asymmetric incentive. And when it comes to innovation, especially innovation of the order of jumping the curve, innovation that really kind of offers people to do things differently, not just better, but really differently. This innovation requires business managers, compliance, like all the participants of this process to have an incentive, not just to reject it because, like if something goes wrong, the risk is huge, it's their reputation online. If something goes right, how exactly they benefit from it? Like businesses benefit, but compliance doesn't. So it's very easy for compliance just to say no, right? And so this process has to be streamlined, and probably it has to be a special process for POC. Our POCs are a little bit longer than yours. So we are talking more like 6 to 8 weeks. And it's an involved process. So when we can get vendor approval faster just for POC, it's very kind of non-risky, but we get the form that, like quite often is as detailed as if you're getting the most proprietary information into your server, which kind of nothing like that is happening. So POC, to be optimized, that should be the time when you're really getting in and learning, right? Like as you said, you're learning the objectives, right? We kind of, with our product, we know who needs what and what we can solve for them, even though they might not know that it's solvable. But the point is that we want to get in and during POC, develop the level of trust, develop the level of communication, and learn much more about vendor approval requirements for permanent time, to learn more about the budget and what budget is available for various parts of the organization. So the budget for POC also should be kind of a separate budget. Like you want to try new things. You want to get an incentive to try new things. And obviously the success of POC is resources that the institution has to devote so that you get access to data, you get access to businesses, etc.
That's exactly what we did just now. Recently, we built out a new framework for working with the startups. We call it a rapid POC. It's taking all the third-party onboarding processes, which used to be, lots of months even of processes, internal processes with risk, with compliance, with information security, with sourcing, and we really taken them down to days. And this is definitely where we cracked down and implemented it.
Is it done under a sandbox or?
There are several ways, one of which is a sandbox, exactly. David, I wanted to hear about your perspective of a tech partner, how you can, is there a room for you,
It's a great question. And the answer is yes, absolutely. So what Deloitte does today, we search the market for relevant solutions that we can help either prepare or give the company the push it needs to really be relevant for our clients. We, on the sales side, I guess, to a startup, we know our clients better than anyone else, especially a startup that doesn't know a client. We know their needs. In most cases, we're their business advisor, whatever it is in the world. Work with the local partners to really understand what their need is, and then can go and relay that information to the startup and work with them to better perfect what they do. So this is something we do on an active basis. Deloitte also knows how to attach existing solutions that may exist in the market to Deloitte solutions. That's another very successful model that we're doing. And me personally, I'm actively looking for fintech solutions that, again, can better help our clients. So if anyone here in the room is a fintech startup, please come and find me. I'd love to meet you and hope you've enjoyed your day.
30 seconds, sorry, answer. What do you think a startup should partner with first, Wall Street or Silicon Valley? Difficult question.
I would say the other way around. I would suggest banks partnering with Silicon Valley. Maybe you are talking about Facebook, Libra.
For example?
So I know that some colleagues at BBVA are talking with the GAFAs. I'm not in the state of the art of the conversations, but I think that there is a huge opportunity both for fintechs or startups and also for banks in order to not to compete but to collaborate with the GAFAs. Yeah.
I think it really depends on the industry that you're in. In fintech, after being, going through that evolution stage and being on the other side, trying to partner with Silicon Valley, I think that there's a much more substantial business and value that can be created when partnering with Wall Street.
I'd say neither. Work with a strong partner that will just open the doors for you and work with you as your channel. So partner with a strong technology partner that can just open doors for you.
I would say it's very important. I would say it doesn't matter. But it's all very person-dependent. A strong manager, a senior person at the organization who really wants to make a difference, that is the best way to go.
Mm-hmm. So I'd say Silicon Valley traditionally has been known better for partnerships, and the New York area, I guess, would be more of the banks. But I do think it's a trick question. So
I'm not trying to make it easy.
That's the point, I guess, right? So the trick question is, I think anybody that is willing to work with you and create a partnership, and it's been said here already, go out and work with them, and I guess the domino effect of working with one partner, really, wherever the geography is, will hopefully lead you to the next partner.
All right. Thank you very much, everybody. It was lovely.
Thank you.